If you're looking for professional day trading education, high-level trade analysis and dissection, you've come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that. High-level professional day trading education, all here for free on YouTube and on X. And tonight we are going to be going over a trade that took an extreme amount of patience. So let's get into it. One sec here, folks. Just gotta go over to this. Oops, shit, I fucked up. One sec, guys. Sorry about this. Let me share my screen. There we go. Okay, now that I've got my shit together, let's do this. So, first off, for those of you that are just joining us, these levels represent, these blue levels that are struck, they represent technical levels, which obviously is no surprise, but all of these are struck 30 minutes at a minimum prior to the market open. And then I develop trade plans surrounding these levels. So it's not like it's marking high of range or low of range or a high or a low or a whatever. These levels are struck 30 minutes to the market open. And then these trade plans, that's what we follow. That's why you see the consistency that you see on this channel. Everything is already laid out even before the market open. And that's how we roll. That's how I roll. So let's go over Qs first, because SPY has a little bit more to it. So Qs was really interesting. So on Qs, there was a first trade here that basically I was looking for a very, one sec, let me zoom in and draw it out for you here. So what I'm looking for is more of a failure. I call it kind of like trend formation, but there was also the 5 EMA. Okay, so it kind of has a couple of things going for it down here. So once we open, we kind of pop and we wash through that 5 EMA definitively. Once it pops back up, you execute the trade, and then you essentially risk off your level because it's within risk tolerance. So on that, entered into the trade, and it had a little pullback. It doesn't look like much, but you can see on the options, you know, you're still looking at about, so my entry was in and around 135-ish, and then I sold at about, my highest is about 175. So I don't know what that would be percentage-wise off the top of my head, but it's probably about 15%, maybe 20%, somewhere in that area, maybe a hair less than that. But it's more than enough, and that's why options are beautiful. So initial trade was on that, okay? Then I continue kind of working this trade as it comes up into this area. It pushes up, kind of coming up into that level, and then just continue working it, actually a little bit further ahead. So as this is coming up, we have a main level here, and it's grinding. So that's why you see the meltdown that you do, and I'm okay with that. At first I need to explain, like, because there can be a little bit of confliction here. I am a trader of equity. I am a stock trader. I enter via options. And I know that that can sound a little confusing. It isn't. I watch the stock chart through and through. I don't care if my option premium is melting down. I just enter via options because it's a way to take advantage of a small amount of capital going in. So you can take and I'll give you an example, a massive position, okay? And it really doesn't cost that much relative to what it would cost in equity to take that amount of shares that I take in contracts, relatively speaking. It would be like tens of millions of dollars, that position sometimes on a big position. So long story short, I am a stock trader that enters via options. So I watch the stock chart. This options chart that you see here, this is strictly for entries and exits. That's it. I am watching the stock chart, okay? So I don't care if it's melting down. I'm simply entering into these levels, and I continue working it. So I worked this trade until, I don't know, about like 10:35, somewhere in that area. And basically, there's a way to correct your average, especially if it's kind of being grindy the way that it is. It's not much, but the second it goes green, I'm paying myself. So a quick ad here, pay myself. And then as it pops back up, because it's obviously extremely weak and it's having a real hard time breaking over this range, I'm going to take advantage of that. Even if the range that I'm going to pay myself is in this area from here to here. Okay. That's all I need. I don't need much on options, guys. Same thing here, like on my last entry, I laid the boots to it, and that was entered in and around 30 cents and then paid myself at just under 50 cents. So you're talking, what is that? 50, 60% like that. It is ridiculous. So as long as you have a trade plan, I work like that's how I do this. I just work that trade plan fully. I don't give in to emotion because it's not doing exactly what I want. I just simply remain calm, look for my opportunity, and I get the fuck out. And on that trade where it didn't do really anything, right? So this last little bit of the trade here, it didn't really do anything. There's a little bit of range, and it's a little deceptive because this is well over a point of movement from highs to lows, by the way. But on that, I'm still locking in $3,525 on these little moves. And that's the power of these options. And that's the power, more importantly, of this strategy. So that was Qs. Now I want to discuss SPY. SPY was an absolutely beautiful trade. It took time to come in. But again, I worked the trade plan. So I'm going to let you know what the trade plan was for those of you that aren't members. So at the open, when we push, we come up into this level. I will execute that trade and pay myself. That's what I did here. Locked in. Really nice trade. As it comes back up, because I know I'm heavily protected into this upper level that is only $1.20 per share away. That's well within risk tolerance of an almost $700 stock or ETF. So I continue just working this trade. I don't care that it's going against me. This is my fucking risk. I don't care what it does up until the point that it comes up and tests it. And if there's only two things that can happen. Either you get stopped out on confirmation when it truly confirms the breakage, or you're profitable in this trade on washes. And that's all I did. And same thing on Qs. I'm looking because it's pissing around. So I'm going to give you guys a little piece of advice. Now, some of you might not be able to implement this into your trading right now because you're trading out of small accounts, and that's okay. But it's a lesson for you to use down the road. So when we have a stock that's essentially, or ETF, whatever, it doesn't matter, that is pissing around in a real tight range, okay? That's a real tight range. That's its main range right there, right? And it's not breaking out and it's not breaking down. And Qs is doing the same thing. So both of the stocks or ETFs that you're watching are doing the same thing. What you need to do is at some point, you have to be just like, okay, enough of this shit. Like, I've got other things to do. I don't want to continue watching it because as the day progresses, as time goes by, and I've talked about this before, your odds of these trades working out become lower and lower. Why? Because the variables increase dramatically. As more time goes by, there's more people involved in that trade, whether it be the long or the short. It doesn't matter. There's too many fucking people in there. There's too many cooks in the kitchen, and it becomes irrational. Okay. So what you need to do is you need an exit strategy. And once you have the opportunity to get the fuck out, you need to take it. So when we push up right in this area, I'm looking for exits, okay, here and here. And that's basically what you're seeing in this area, okay? Once it pushes up, I am going to be getting involved with that trade, okay? That's right in and around 1030, which is right in and around this area. So you have to get in and get the fuck out. You're looking for an opportunity to correct your average and get the fuck out because you're sitting through a consolidation. You're sitting through it too long. Again, to bring back the point that I made at the beginning of this little conversation, at some point you have to say enough is enough. I've got shit to do. I don't want to sit through a consolidation, because what we have going on, with feds and numbers, with massive manipulation coming into numbers. And I do want to point that out quickly. This candle here was prior to numbers, and we have huge volatility coming into numbers 20 minutes later, right? Like, there's someone that knows something, somebody that's privy to information. The manipulation and corruption and everything else out there is a real thing. So when you see heavy manipulation or bullshit going on these charts, at some point you just need to call it. So correct that average and get the fuck out. And that's exactly what I did. So on this chart, you're going to see ads on the way up. And I really want to make it clear, from here to here is a hair over 1 point. If you can't handle 1 point per share of movement and range for risk, you are in with way too much size. And some people will think, because they're trading with, oh, I'm only taking 20 shares or 3 contracts, whatever it is, they'll say it's like, but I'm only taking that. Well, I don't care how many shares or contracts you think you're only taking. You have to trade within your skill set. You have to trade within whatever you can emotionally handle, because if you don't, you're going to fuck it up. In this trade here, I had quite a few contracts in this, a lot of contracts. I was day trading live in both of these 2 trades. And the amount of contracts that I had, for most people, they won't be able to handle that. But because I've been doing this for over a decade, and I simply just follow my trade plan, and more importantly, I would never get involved with a trade where I oversize to where it's too much size, where I'm freaking out. Cool as a cucumber in these trades, guys. That's how it needs to be done. And on SPY, again, well, most people would be red in the position or freak out on the pop here, or when it's coming up and it's not coming down, people freak out. They would be red, and I am green, more than green. $4,020 on that trade. So overall, between the 2 trades, that's over $7,000 for trades that really technically didn't really work. They didn't really go anywhere. They didn't do much. And that's the power of management and the strategy. Those 2 things combined make you bulletproof, period, full stop. That's how it is. So I think for those out there that are struggling and continuously spinning your wheels, and you're watching and you're bouncing from YouTube channel to YouTube channel and all of that shit, and you're trying to go it alone, at what point, just like in this trade, at what point do you say enough is enough? You have 2 options there. Actually 3. Either you continue to struggle until you finally blow up. You blow up immediately and fail ultimately, or you go get help. So if you have a guy that's talking to you right now that has been doing this successfully for over a decade, and you can go back, nothing's changed on this channel in 8 years that I've been producing content here on YouTube. The strategy is the same. All of it's the same. Entries, exits, all of it. It's all the same. So if you've got a guy that can actually help you, at what point do you say enough is enough? I got to get help. Come to tricktrades.com. And if not, chase your tail. Watch the free stuff. That's why it's there. But I hope people that are watching have some sense and they're like, okay, I need help. There's no shame in needing help. There's a weird pride and ego issue that I see a lot of traders, because for the most part, in my experience, and I've worked with a lot of people, day trading attracts the wrong people to it. They attract greedy people with no emotional control, gamblers, people with ego that think that they can just do it themselves because they've taken a couple of trades here and there and they threw shit up against the wall and it happened to stick. This is a game of consistency, skill, and patience. So you need to work with someone that can teach you those attributes, or you will fail. So come to tricktrades.com or have fun on your own. On that note, folks, I hope you guys all have a wonderful evening, and I will see you tomorrow as usual. Adios, folks.